Hello there. Welcome to a brand new live episode of Be the Boss of Your Money. Thank you for joining me. I want you to be the boss of your money, not you to be the boss, or I should say, not your money to be the boss of you. Speaking of the boss of your money, I have someone who I consider a real money boss. My guest is Leslie Tayne, founder of the Tayne Law Group, debt resolution for businesses and consumers, and alternatives to bankruptcy. She provides a vital service, but I do believe with the pandemic going on that her legal services are more vital than ever to consumers. She is someone we want to speak with. So we're going to skip the usual stock market update. Yes, I know it was a tough day in the market, but we'll talk about that at length tomorrow with a lot more perspective. To save time and to spend as much time with our guest, I'm just going to cut to the intro and bring Leslie in. So here we go. Stick around. You're going to want to watch this. If you're watching from the live stream, welcome. Please ask your questions in the comments. If you're watching in the replay, I'd like to welcome you as well. And certainly your questions are welcome in the comments as well. Okay, here we go. Hey, Leslie, nice to see you. Thank you so much for taking the time to be my guest.
Thank you for having me today.
You're very welcome. So you are a money person, and what what pushed me or attracted me to having you as a guest is because you are so involved with personal finance and helping people be better with their money. And it's just such a common thing that people are not as good with their money as they should be. Maybe it's for lack of education in high school and college. But right now with the pandemic, we're going through a really tough time for consumers. Businesses have closed, sky high unemployment. It looks like, not looks like, the COVID cases are surging again. And it got me thinking, who could I speak to who could help viewers and who could add value? And that's Leslie Tayne.
Well, thank you so much. I appreciate the confidence in that.
I appreciate it. You're an expert in what you do, and you're also very well known. And it turns out that your office is right down the street from my office. We're both located in Melville, so we're practically neighbors. Even though this is probably the first time we've met face to face, even though it's virtual.
In Melville, you're neighbors with a lot of people.
Yes. So
it's a hub.
I want to talk to you a little bit about consumers in particular. I think most people who would watch me are consumers. Yes, some of them are business owners, but even they're coming to me mostly from a consumer point of view. What's the deal now? Are you seeing a surge of consumers who are running into problems with debt? Is it more so than usual because of the pandemic?
So things are different because of the pandemic. So traditionally, there are a number of people who have debt-related issues, and that happens as a course of life: loss of job, medical issues, overspending. A bad business deal could do it. A divorce. There's so many reasons why somebody could end up in debt. The pandemic is another reason why one might end up in debt, or a consumer could end up with issues with their debts. And that could stem from, again, loss of income. It could stem from being in a forbearance program. It could be from an illness. You might have had COVID, or you were taking care of a family member with COVID, or you're at high risk and you don't want to go back to work. So what we're seeing really is a change in the reasons why people are in debt and the issues that they have. So that's really the difference. But traditionally, debt is out there. Debt is part of life. And people do have debt. It's a matter of, like what you said, how it's managed.
Okay. And what are some of the ways that you, I'd imagine a consumer would reach out to you and say, I am drowning right now. I'm not making payments, or my credit score is getting killed, and they call you. But is that too late to call you? When should people actually reach out for, I guess, debt resolution?
So it's like being sick. So, and I'll liken it to that type of an analogy. What happens is you might have a little scratch in your throat. You might then start having a cough. You might start hacking. You might then have a fever. It's all the same kind of progress in debt. So you start to realize that you're making minimum payments. You're realizing that, you know what, you don't have enough money within your budget to pay cash for something. So you start using credit cards. Then you start balance transferring, or you start, making minimum payments plus, and then you start not paying attention to the total balances, and then something happens, and all of a sudden things get challenged. So there's two answers to your question. Part one is, when should you call me? The ideal time, if I was going to make that suggestion to somebody, is to call me as soon as you feel that scratch in your throat. As soon as you start to feel that, you know what, I don't think all the money that comes in is covering all of my expenses. What am I going to do about that? But that's not realistic. Most people don't come to me at that point. They really try what I call over-the-counter resolution measures. And then they may want to try to refinance their house. They may want to try for a personal loan. They'll balance transfer. Those are over-the-counter, what I call solutions to debt problems. What then ends up happening is they've done all that, and they've either hit a brick wall or things got considerably worse. And they then call and say, hey, you know what? I really have a problem now. Either I can't meet any of my obligations, or my debts have exceeded, and I finally looked at my balances and realized that the balances are super high and I don't know how I'm going to get out of this. Or maybe they've missed a payment and now the creditors are not so willing to work with them. So again, ideally, it would be wonderful if you came to me early on and had a conversation, because then I can do I have more tricks up my sleeve, so to speak, in terms of suggestions. But later on, it doesn't mean I can't fix it. I can. It's just that the person who comes to me at that point is feeling much sicker financially.
All right. So they have to take, the longer you wait, the tougher the medicine, and the fewer alternatives you're going to have.
And the more desperate you're going to feel. So you're going to feel super emotional about that. And you're going to, as time goes on, it's going to be a real challenge emotionally and mentally as you start to go down that path of, how do I pay my bills? And now you're up at night, or you're arguing with your significant other, or you're robbing people.
I was going to ask you about that. I mean, you're probably in a lot of ways, having to play, partially like a therapist to your clients to, talk them sort of off a ledge and calm them down and give them some peace of mind.
I am like a debt therapist. I definitely would say that aside from my counseling role as an attorney, I am a therapist in a lot of ways. I'm not a licensed therapist, psychotherapist in any stretch of the imagination, and I don't purport to be. But as part of my role in helping somebody from point A to point B in terms of dealing with their finances, there's a lot of emotion that's involved in dealing with finances. People are very overwhelmed. There's anger, there's resentment, there's sadness, there's fear, there's doubt. And even coming to me as a professional, there's a lot of emotions that people feel. Can they trust me? Do they know who I am? Is this really the right solution for them? Is this going to help? So I do have to be very mindful of people's emotional state and their feelings throughout the process. But I love that about my job, actually. I really love that piece of it.
I see that a lot in my career as well as a financial advisor, and I certainly will say to somebody, you've reached a point where I personally am going to recommend that you see a professional therapist, not just someone who can help you talk to you, help you feel better about your finances. You have a phenomenal website. We're talking about that before. I just want to put that up here. It is. Okay. So this is just a very sleek website. Here's a way to get in touch with you. It tells us a lot about you. Okay. And I guess this is probably the best way to reach you. I watched the introductory video, and it did a really good job of explaining what you do. But, your thing is, and I hope I don't butcher this, you're a debt resolution attorney, and you help people find alternatives to bankruptcy. Is that a good summary, or should I?
Yes. No, that's an excellent summary of what I do.
Okay.
To elaborate on that, what we do is we help people deal with debt. So that is credit card debt, student loan debt, business lines of credit, merchant cash advances. We're doing tons and tons of those these days. We deal with most types of debt. What we traditionally try to stay away from and don't practice is in the area of mortgage modification and foreclosure process, and federal and state tax debt. But as far as general debts go, I've seen it all. We've renegotiated it all, everything from markers and casinos, airplane debt, purchase debt, everything. So all kinds of unique situations, why people get into debt and how really it plays a bit of a role, but it doesn't really matter so much why you have the debt or how you got there in some ways. What matters most is that you're taking proactive steps to resolve them. And we don't file any bankruptcy for clients. So when we evaluate a potential client, we're looking to see and look for certain markers so that we know that we're going to be successful with that particular file. We don't take every single client that comes through the door. Sometimes there are clients that do need to file bankruptcy, and we will vet that out and then refer them out to those that are qualified to file bankruptcy on behalf of individuals. But most people come to us because they don't want to file bankruptcy. They actually do see their credit score improve with the process that we integrate. It's a lot less restrictive, and it doesn't have the same impact that bankruptcy would have. And certainly as a business owner, most business owners don't want to have to go down that road. So it's a great alternative. Very, very successful.
Okay, so debt resolution. You reach out to their creditors, and the rules, what consumers' rights are.
I do.
I think that's probably the biggest advantage of using you specifically, because you're an attorney. So what people's rights are, and that what these debt collectors or creditors can get away with.
I do. Not only what they can get away with, but I have relationships with them. And one of my goals early on in my career was to build those relationships with the creditors. You might think that it was the reverse in trying to build relationships with clients, but it was important that I build these relationships with the creditors, or major national banks, local collection agencies and law firms, because I wanted them to understand that when I am negotiating on behalf of my client, that I am a credible entity, and that
you're negotiating, you're coming to them in good faith.
No doubt. And that when I say I'm going to do something, I do it. I follow up. I'm not looking to make things difficult. I'm looking for a solution that works for both sides of the table. And I do understand what my clients' rights are. And I understand, when a collector says something to me, whether it's a viable comment or not. And that does certainly place my clients in an advantage, certainly working with me. I know exactly what a creditor can and cannot do.
Okay. I'm going to get into some specific questions for you, but people, if you're watching this in the live stream right now, if you have any questions, hit us up in the comments. I see a few, so we're going to start going through those. That to me is the best part of this whole thing, by the way. If you're watching this in the replay, welcome to you as well. And certainly ask your questions in the comments. That would be terrific. We will definitely see those. So we've got a few here. First we're going to start with a mutual friend. Okay. So Jason, it is great to see you.
No?
What was that?
I'm a fellow SUNY Albany grad. No, I believe Jason.
Yes, a fellow SUNY Albany grad as well. And by the way, my wife is a SUNY Albany grad, because I know that because we met in college. Uh-huh. We actually met in 1987.
Very nice. Congratulations.
Thank you very much.
Go Danes.
Go Danes. Absolutely. And we have Leah over here. And Leah says the pandemic has drastically affected businesses and consumers alike. For businesses struggling now from COVID, what steps should they take? Where should they turn to keep their heads above ground in this uncertain time?
Great question.
Well, I think those are actually really good questions. So what say you, Leslie?
So businesses are struggling now, and will continue to struggle, unfortunately, for quite some time, since there's so much unknown going on. There are businesses that are doing really well. So one of the things that I recommend to businesses is what can you do to pivot? What can you do to help your business gain access to the market share during the pandemic? Is there something that you could do in your business to turn it around or create a new opportunity for yourself? So that's certainly one way. And a lot of businesses have pivoted and reinvented themselves during COVID and during the pandemic to be able to sustain themselves. Another thing to do is really you have to take a look at your bottom line. You need to look at your income and expenses, re-budget on a regular basis, look to see what your debts are, what your financial obligations are, work to try to renegotiate some of those and create new payment obligations so that you can give yourself a little bit of breathing room. But most importantly, you really want to try to survive this. In order to survive and ultimately thrive, you need to put yourself a little bit in neutral, take a look around, look at that budget. How can you pivot? And what can you do to put yourself on a different level now?
Right. You know, I was speaking with a few of my fellow financial advisors, and we do get together and speak regularly. And, you know, one of the things we talk to people about, to our clients, is, you know, having that 6 to 12 months of expenses in the bank. And that's tough to do for a lot of people. And I think in particular around where we live, it's just an expensive area. But, you know, 6 to 12 months, I mean, if somebody has 6 months of expenses in the bank, there's a good chance that they already went through it.
By now, yes, because we've been going through this now for almost 9 months. Yep.
Yeah. So it's just it's a pretty scary, frightening thing. And there's lots of articles going around how food banks are struggling right now to help out their communities. And one of the things that I follow very closely are these stimulus talks. That if that doesn't highlight what's going on, like how badly we need stimulus for the economy right now, then I don't know what does. It's one of the reasons why the stock market is getting slammed so hard this week, because of a lack of stimulus, which it's a little late to get anything before the election at this point. Leah has another one. With the holidays coming, what steps should consumers take to avoid holiday debt? Cancel the holidays. What can you do?
The holidays are coming, and if you have gone through your cash flow, like you said, you know, ideally you would want to have that money in the bank 6 to 9 months, and people may have gone through that, and they may have used what they normally traditionally save for holidays. So you might not have the money right now to think about the holiday. It's definitely a time to rethink your holiday spending. You know, what's really important at this point in time this year? Where have you come from? Where are you going? And what's happening to you financially? Look at your budgets and determine what you're going to be able to do and not do, and then have realistic discussions with family members and say, hey, you know, this isn't the year for us to get together with everybody and come up with 20 gifts. This is the year that, you know, we just can't do something like that. So, you know, understanding where you're at and being able to communicate that to the rest of your family and being realistic.
The word no is going to have to be used a lot more.
Well, that's not a common word. And that's not a commonly used word when it comes to finances, because people tend to use credit cards and they'll just stick it on a credit card and deal with it later. But I would encourage you to look for the sale opportunities, cut back if you need to. One of the things I would also think about is not necessarily going to your cash reserves. In fact, ideally, from the financial perspective, using your credit before you go to cash is a better way to go, because once you run out of cash, if you run out of credit, you have nothing left. But if you use your credit and that gets used up, you still have the cash to fall back on. So you want to be really careful about that.
And if you recall, during the Great Recession, so 11 years ago or so, 12 years ago, people had lines of credit on their houses, on personal lines of credit, on their credit cards, et cetera. And they got cut off. People are like, what do you mean? I mean, you didn't even use it. And people's credit lines are cut off. And that's one of the reasons why consumers got into so much trouble, because they had nowhere to turn. They just thought the credit line could always be there.
Yep.
I would expect that to happen as time goes on.
It just hasn't happened yet. So the banks are going to reassess their risk tolerance at this point. We're coming to the end of the year. We're in the final fourth quarter. They're going to definitely take a look at what's gone on and what continues to go on in 2021. We're entering 2021 still in a pandemic. So the banks are going to definitely take a look. And while they've offered forbearance and other opportunities, and they didn't want to pull the rug out from consumers, I can tell you that in 2021, that's going to be reassessed. And
no more Mr. Nice Guy.
Yep, and available credit is going to be reduced. You're already starting to see it. So you get less credit card offers in the mail. You're getting there's a less availability for lending opportunities. Even in the real estate world, some banks have cut off their lending.
Sure.
And you're starting to see, changes in the banks, when you start
I'm
to
getting
see
I'm getting calls from clients who own their own, business owners, and they own the real estate where they operate their business. And some of them are calling me saying, the big banks that we've used are just not being amenable to refinancing our properties.
nope, and
Because
lending.
their revenue is down 50% or more, and they're looking for, they're calling me for referral sources to help them refinance, but
And
it's
that's
really
where the
tough for
debt
them.
balance are going to come in, because you're going to end up using up what's available, and there's no way to get additional lines of credit. And you're going to see more and more people look for fast cash and fast funding opportunities, merchant cash advances, and that's where you're looking at huge amounts of interest, because in the way they write those agreements, they don't write them as loans, they write them as futures purchases in order to try to get around some of the banking laws. So they're able to then charge huge amounts of interest. I've seen interest at 40, 50% on some of those loans, with tremendous amounts of fees. You could borrow 20 grand and end up having to pay back $30,000, $40,000 on those type of loans, and they pull them out of the merchants'
Right.
daily receivables. So be aware that the banks are going to change their policies come the new year, and you want to be prepared for that. You want to leave your cash in the bank. You want to be careful with your lines of credit, but utilize those now and build up the cash reserves.
So, any special COVID relief for those individuals? Roxanne put this up a few minutes ago, but I guess her question is COVID relief programs for individuals.
So there's still a COVID relief program on the federal student loans. That's going to go through the end of the year. So if you have a federal student loan, the interest is zero and there's no collection efforts. In certain areas, jurisdictions, and states, that might vary. There are some programs, some banks are still offering some programs based on certain levels of hardship. You do have to demonstrate it. I would not recommend calling up a creditor and telling them that you think that they should give you some sort of relief program because there's a pandemic. I think that most banks, and certainly in my experience in talking to the banks, that's not a reason for relief. If you are directly impacted, you have a loss of business and income, or you've been affected by an illness as a result, you can have a conversation. But again, because of what's going on, I would definitely reserve my request for programs until you absolutely need it. But as far as government programs, and she might be referring to government type of programs, there are state and local programs that are still available. And depending on the type of need that you have, whether it's housing, food, medical insurance, or otherwise, you can look into those.
Okay. A friend of mine is out there, Filippo. What is better, paying down debts or saving for retirement? Should you invest in 401k or stocks if you have student loans, mortgages, credit cards? Where do you draw the line? I mean, I have my own answer to that, but I think Philly knows my answer. So what's your answer?
I'm sure that we're going to be similar in the same kind of thought process with it. So I think you can do both, and I think a balance is really important. So absolutely, you should be paying down debts, but saving for retirement, I still believe, is really important, and I encourage those as soon as you have a job to start saving for retirement. I set up my own children with those type of opportunities at the age of 20 and 21 when they were starting to work. So I do believe in investments. You can certainly invest when you have student loans. Listen, a student loan is a long-term repayment plan. It's based on a 20 or a 30-year repayment. So if you take the thought process that I'm just going to pay down my student loans and not put money anywhere else, you might spend the next 20 years paying down student loans and then have no money invested anywhere else.
And you lose that long-term, opportunity for compounding your wealth over time.
Exactly. Yeah. So there's a balance that has to happen between all that.
There's a few levers you have to push. You have to have a little push on an emergency fund, investing in your retirement plan, and paying down your student loans. It's really has to be a trifecta, in my opinion.
It does. And those are very important pieces of the budget. And when you're looking at your overall budget, listen, there's going to be times in your life when you can't put more money in retirement. You can't put more money into a savings account where something's come up and you have to take from your emergency fund. That's part of life. But it can't be that you put all your eggs in one basket and say, I'm just going to pay down my credit cards or my student loans And this is coming from, I'm a debt relief attorney. I mean, I renegotiate credit card debt every single day. So I'm not saying that you shouldn't pay those off. You should, but you have to be careful what you're putting into debt also. So if you're paying it, but you're adding to it, then you need to look at your budget. You need to look at your income and your cash flow, because something is amiss there. And if you don't have the requisite cash flow to cover your budget without going to lines of credit and debt, then you're going to end up with a problem at some point.
Right. So I've seen people pay down their debts only to run them back up, 6 months, a year, 2 years later.
Well, again, that potentially is a budgeting and cash flow issue. Like I said, if you're looking at your budget and there's not enough money to cover everything, and you need to use credit cards, and then you can't pay those credit cards off, then there's a challenge. That's not saying that you needed to make a large purchase and you're going to pay something off over time and you've budgeted to pay for that. That I'm talking about day-to-day expenses, food, utilities, housing, car payments. Those are day-to-day expenses. If you can't reach those with the cash flow that you have and you're putting everything onto credit cards, that's the time you need to reevaluate what's going on. And truthfully, you need to see me.
Right. We were talking about Christmas shopping and holidays and gifts. So Filippo says grab bag is a great solution. By the way, Filippo, you are uninvited to my holiday party. No, just kidding.
Good grab bag gifts. If he's good at the grab bag gifts, then you want him.
Yes.
I love grab bags, and I love Secret Santa or Secret Holiday Person. I love those. I don't see why in larger families that everybody doesn't pick one person to buy for, so they don't feel obligated to buy for everybody. I mean, that's a huge challenge, and I do hear that from my clients even now that are saying, when we have opportunities to resolve debts, and they're telling me that, well, the holidays are coming. Holidays aren't just gift buying. It also includes buying food. I mean, Thanksgiving is a very expensive holiday. You have a family, even your immediate family, because this year it's not really going to be extended family. Let's say your immediate family is 5 or 6 people. That is a very expensive meal. Food is super expensive these days.
It sure is. And this is going to be maybe a big, a big Boston market year, since we're not getting off fancy, we're not having company. So I remember my mom, we did a Boston market once, and, my mom's putting everything into nice, dinner cookware and everything. And I'm like, hey, Ma, can I have some turkey with 2 sides? And she's like, shh. So let me see if I just didn't miss anything. We've got a couple questions here. When somebody gets started, they go to see you. How much does it cost to use your services, and how long does it take to get resolution relief?
So there's no cost to speak with us. We have a free no obligation consultation process. We want people to feel that they can come in and have a conversation and see if it's a good fit. And if it's not, we'll make a recommendation to what might be a good fit. As we go down the line, what we do is we come up with a budgeted dollar amount based on the total amount of debt somebody has. So that payment plan is within our client's budget. So again, it depends on how much debt. If you have $25,000 or $100,000 of debt, your budget is going to be very different. Also, your willingness to pay it off. So I have some clients that want to be more aggressive about paying off debts quicker. So we come up with a larger monthly budget to pay off the debts quicker. And then I have others that are really struggling and they just don't have the cash flow. So we try to spread it out a little bit longer and we lower the payment. So we do make accommodations and we do customize the programs that we have for clients. Everything's included in the payment. So unlike a traditional attorney's office, we don't do any billing. There's no hourly rates. So clients can feel comfortable making phone calls and calling us for updates and having conversations. Like we started out saying in the beginning, this is an emotional process, and we want clients to feel very comfortable about contacting us and having conversations about their debts so that they can trust me, my office, and the process, that we're going to not only get the debts resolved, but that they're going to be in a better place than they were when they started.
Do people take a hit to their credit or their credit score when they use you?
Generally, no. In fact, what we often see is we see improvements to the credit.
You mentioned that, but so how does that work?
It depends where the credit is. Like, you know what? You can have great credit. You can have a 740 credit score, but no one's going to lend you money because your debt to income ratio is off. You don't have any money in the bank. You're making your payments on time, and you might be making a little bit more than the minimum payment, but the credit score is not going to do you any good if you can't borrow with it. So what ends up happening is that we reverse that process by creating cash flow, helping a client pay off their day-to-day expenses so that they're living within their budget. And by resolving the accounts, we change the debt to income ratio. And it actually, many clients see tremendous improvements in paying them off. I had a client yesterday tell me their score went up 40 points with just the payoff on one account. I mean, that's fantastic.
That is fantastic. And let me see what else.
We call it the Leslie Tayne or the Tayne Law Group Boost. You've heard of like Experian Boost. This is the Tayne Law Group Boost, credit boost.
I like that. Very, 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 very cool. I think we should get that on a T-shirt, but just be my marketing thing. And the implications.
My marketing department.
Okay, we'll have to tell Leah to get going on that because she's terrific at this. What implications does filing bankruptcy have on someone's life and their credit score and everything?
Well, for sure, you're going to see your credit score tank. That's for sure. And you may see other things go up too. So certain licenses, depending on what field that you work in, you might have some challenges renewing certain licenses, especially security related licenses become problematic. You definitely have challenges borrowing for sure, mortgages, insurance. And that will stay on your credit for anywhere from 7 to 10 years. And depending on what your income is, you could be forced into a repayment plan and forced into a 100% repayment plan. So keep in mind, there's a couple of different types of bankruptcies. You have to qualify to file that bankruptcy. Not all debts are bankruptable. And you might find that based on your income and your assets, that either you don't qualify or you qualify, but you have to pay 100 cents on the dollar in a 3 to 5 year repayment plan, and that does not.
That makes no sense. They might as well go to you and come up with a payment plan that works and that helps them.
100%.
And you're going to say that's what I've been telling you, Mitch. That's it. That's the key.
You know what happens that a lot of people say to me, I didn't even know you existed. I didn't even know your services were out there. I was told I needed to file bankruptcy. Bankruptcy is kind of a little on the old school side. That's what's out there. Whenever you had a financial problem and you couldn't pay your bills, bankruptcy was recommended. But you know what? There are alternatives to bankruptcy that make sense. And there are alternatives to bankruptcy that work. I think what ends up happening is that back in the day when debt settlement first came about, and even recently, there are unscrupulous, excuse me, I can't get the word out, but there are people in the industry, businesses in the industry that have taken advantage of consumers. And as a result, that has created the stereotype that debt settlement and debt resolution is bad and it's hurtful. And yes, depending on who you work with, you could have a challenge. Those that are not licensed to do that type of work, those that are inexperienced, those that are really not taking your situation into consideration, or one side.
That's just another reason why you'd want to use a qualified attorney who knows your
exactly.
rights.
And it doesn't cost more, but again, most people didn't realize that that's an option. They see it on TV, they may get solicited by it in the mail, and they think, because they're on TV, that's the way to go. Or I got this in the mail and there's some information on here, they know stuff about me, I should call them. But that's not necessarily who's going to work for your best interest. And they may not even be licensed. And what ends up happening is when they take advantage of consumers, many of these companies, that creates a lot of bad press. And that creates the aura that an alternative to bankruptcy is problematic. But it really isn't. And I can tell you, for doing this for almost 23 years now, that the debt solutions that I come up with are exceptionally successful, and not only cost savings, but credit saving, asset preservation. And my clients, while many of them want to stay anonymous, are super happy, and they come from all walks of life. I have doctors and accountants and financial people and people who make 7-figure incomes that are my clients. So
too much debt is too much debt, regardless of your income. Listen,
it doesn't matter, just get it zero.
I want to thank you for your time, for this valuable information, and Really appreciate it. So we're going to I think we could probably talk about this for a much lengthier period of time. So let's do this again sometime soon, and maybe we'll get some changes in laws or regulations, and we'll have like even more reason to speak again.
No
And
doubt.
I look forward to seeing you in person at some upcoming networking event one of these days.
One of these days, we're allowed to socialize in person.
That's right. So thank you very much. I'll end it here, and I will. I'll be in touch with you. Thank you. Thank you again. I really appreciate your time.
Thank you so much for having me.
Okay. Take care.
You too.